this is most likely what could occur. The IRS finalized the balance due back in 2021 if there was no response issued out. So the IRS department that handles the CP2000 is the AUR department for automated underreporting of income. And the number one thing that this thing says is do not file an amended tax return. So providing guidance and mentorship to this tax professional will say do not file an amended tax return. That's wrong. A service center would not process this because the balance is due based upon an assessment done by a particular department. So that department has jurisdiction over this. Now, before we get into any type of reconsideration, what I would say is that the IRS has this maybe under collections for balance due. So we have to deal with the collections department first. And typically the majority of the cases are with ACS collections. Hopefully that's the case with this taxpayer and is not under revenue officer or field collections. So we would address that first, either getting some kind of hardship, payment plan, something, anything. What that does is curb collections. That way the client would not be subject to any type of collections. There would be no bank levies, wage garnishments, none of that stuff. Instead, we just say, hey, that's a temporary band-aid for some type of repayments to be made. And second of all, the IRS CP2000, what that is kind of like a mini audit. It follows the same procedure as an audit. However, a CP2000 is not. Where it differs a CP2000 from an audit really is that no human by the IRS made changes. Instead, it's just a system-generated notice that read the original tax filings, saw some income that was not included on there, and the system made some changes based upon that additional income. Now, typically, it's some sort of income that was left out. It's sometimes, from my experience, is when somebody self-files a tax return, they receive something, they don't know how to do that themselves, so they kind of put it off to the side. They finalize the return, and lo and behold, it comes back to bite them in the ass. A lot of the times, they probably may have moved, didn't notify that third party that issued that 1099 or whatever the case may be, and all of a sudden it got left out. Other times, it could be something that you never realized you might be getting some kind of income reporting, such as a 1099-C, a cancellation of debt income. So as a tax professional, what you would want to do is calculate the correct tax. Are there exclusions? Are there write-offs? Are there deductions? Are there credits? Is there something that could offset whatever the IRS is proposing? Now, keep in mind, step one is we dealt with collections, put a stay of collections, put a stop in mind. The very next step is, could we calculate the correction of tax? Exclusions, credits, deduction, other ways we could strike back, abatement of penalties even if necessary. And if we happen to do that and it lowers the balances or it abates the penalties, we go ahead and put together a nicely well-organized reconsideration packet, and that gets submitted back to the same AUR department of the IRS that made these changes. But for now, something to keep in mind is for something for older than tax year 2021, it's a very long, drawn-out process. You got to be very, very patient. The moment you submit the pack, you would want to follow up to make sure that it was received by the IRS and that they have it in queue for them to review it. In my experience, they take a really, really long time. It's sometimes over 12 months of processing. That's right, over 1 year. So you definitely would want to address the whole collections matter first.